From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. Welcome to the HPS Macrocast. It's Friday, January 31st, Brexit Day. This is Tony Fratto coming to you from New York. We have John Fagan from Markets Policy Partners up here in the New York office as well. Brendan Walsh in BC. Bryan DeAngelis from HPS joining us from the DC studios too. So we have a full house. Lots to talk about. We almost forgot, guys, to even that today was Brexit Day. It's been so so anticlimactic, and there's lots of other news for us to get into.
But it's a day we never thought would come, and then it came, and we forgot about it.
And here it is. Yeah, we should we should at least mark it. That it's it's like all things Brexit. It's nothing. Nothing is an ending. It's just a beginning.
Exactly.
Yeah, and so this is a beginning of the next 11 months where so the UK is officially out of they're out of the EU. They lose representation. They're not on the European Court of Justice. They don't have a commissioner in Brussels as of today. The staff leaves. They're in a transition for the rest of the year in the single market and in the customs union, and they'll be negotiating their future status between now and really the next deadline is December 31st.
And they have to negotiate individually with each 27 countries, correct?
They need agreement from each of the 27 countries. So they can negotiate with the EU, but any one country can blow up a trade agreement. So the EU has in fact negotiated a lot of trade agreements. The most recent one with Canada was pretty complex, and we'll see how it goes. The advantage that the UK has is that the starting place with the EU is exactly at zero. Right? They are today in compliance with all EU rules and regulations. The difficulty is they want the freedom to be able to change those rules and regulations. That was the whole point of Brexit.
Exactly. Yeah.
So that'll be the tension that they have. There's a lot here in the U.S. There's a lot of interest in a U.S. UK trade agreement. My view on that is that's a back burner if you're the UK. Your front burner is figuring out this relationship with the EU.
Yep.
That's what they're going to have to focus on. There is a deadline there, and they need to get it done.
But that deadline was imposed by Bojo, correct?
Yeah, I mean, look, we've had lots of deadlines, but I think this one, the difference is they had a little bit more leverage with their deadline before. They don't have any. They lack leverage now. Look, it's a big deal. It's they are going to have to figure out how they work together. They're going to have their border issues. UK is 15% of the EU economy. You have 3 million EU citizens living and working in the UK.
Yep.
So what their status is and what happens with their treatment and tax policy and healthcare and everything else that they have to worry about. So we have another, at least another year of drama ahead of us, and I'm sure we'll come back to it. Drama here, though, this week, though, is really the coronavirus. As I was thinking about it, knowing that we were going to be talking about it, it reminded me of Rumsfeld's old adage about the known knowns and the known unknown. And it could be because I was thinking. I went looked at it. And John, you have a lot of knowledge on this that you're going to be able to share with us. But I was just looking at the numbers of regular flu cases, not coronavirus, but regular flu cases are orders of magnitude greater than anything we're talking about with coronavirus. 8,000 people have already died this season from influenza. Scores of children have died from influenza.
That happens every year. Yeah.
This is a fairly normal trade season. We're still counting in, dozens or maybe a couple hundred deaths worldwide, the overwhelming majority of which happen in China. But it's the known knowns and the known unknown unknowns, right? The known knowns is that we know flu happens every year. We're well acquainted with the risks and the data and the statistics that happen every year. The known unknown with the coronavirus is how deadly is it? How does it spread? How quickly can it happen? It seems to be more deadly than a regular virus, even if the numbers are a lot smaller. But we don't know things about it, like when does it spread? Does it spread when it's is it contagious when you have symptoms or before you have symptoms? And all of those kinds of things that we tend to know with our regular flu season, we don't know with coronavirus. John, what do you got?
So just by way of background, I'm obviously not an expert in this space, but I happen to be friends.
We had you here because you're an expert on. You see, you're an expert. You may not be. Maybe you're not an expert, but you're an authority.
I certainly I try to sound like I know what I'm talking about, but it's all secondhand knowledge from actually someone who does know what they're talking about on this issue. I'm very good friends with a noted virologist. And in discussions with him over the past few days, he's made some very interesting points. And you pointed out, Tony, something that uncertainty level is ramped up by the fact that they believe that the coronavirus has a relatively lengthy asymptomatic gestation period in which you're not presenting, you don't have a fever, you don't have really any symptoms at all, but they believe that it is contagious during that period. They're not sure about that, but they believe that to be true. And that gestation period is relatively long. Some estimates went up to 14 days almost. I think they're saying it can be as long as 10 now, sometimes much quicker. But that uncertainty around normal, healthy seeming people being able to pass it on. And as you pointed out, they still aren't entirely sure how it passes human to human. And so just when I spoke with my friend, the virologist, on Sunday earlier this week, he said that first he made a couple of points. One, that China is being much more forthcoming with the data than they've been in past episodes, SARS being one example, that they produced a lot more data a lot more readily. Still, because of the uncertainty factor and because of where it is, which is not the most, it's obviously Wuhan's a very big city, but it's not the most developed part of China. Central China doesn't have the greatest public health system in that environment. The CDC folks and the other experts added, they put a multiplication factor on every number that the Chinese gave them by, 2 to 4 times was what they were estimating. And one of the points he said was even by those numbers, even if you multiply them by 2 to 4%, he said at least initially it seemed as though the Chinese response was disproportionately forceful. He said that if you just showed him the numbers, he wouldn't have guessed that the Chinese government would have locked down 46 million people and 16 cities on the eve of Chinese New Year. He would have guessed a more moderate response, because there are a lot of risks that come along with that kind of heavy restriction around the outbreak. Because while the point he makes is while the coronavirus is the focus, there are just normal health problems that are occurring, like the flu and other stuff. And by locking people down, and it makes it much harder for those other cases to be treated. Clearly, the mortality rate, the infectiousness, the numbers are troubling. It's been less. One of the X factors has been that human-to-human transfers have been less common in the overseas cases. And so that's something that they're watching, although there have begun to be, I guess there was a report from Chicago that one of the patients infected their spouse. But they still don't know how it spreads, and the mortality rate is between 1% and 2%, which is high, and the flu mortality rate is considerably lower than that. They're hoping that the mortality rate will come down as the virus spreads, as the authorities catch up with the response, and as it sort of leaves. They believe that the mortality rate in central China will be higher because the healthcare system there is less is less capable. And they believe that mortality rates in the U.S. and overseas and Europe, they're hoping that those will be lower because the public health systems are better.
Can we talk about the what we're seeing from the economic impact of it? Right now, I mean, what we've seen are halts to economic activity in China. It couldn't come at the worst time, for them with the Lunar New Year and all the movement, which you talked about really briefly last week. But that's been largely shut down, quarantining tens of millions of people in their hometowns. And flights have been canceled. Cruise ships have been, quarantined and stopped and not able to go. Do we have a sense? I think I saw some estimate of someone. I think it was Goldman,
Goldman
knocking
Sachs.
down growth.
By
half a percent or 0.4 of a point.
And that's for the first quarter. And then they assume that we'll get this thing under control and it'll basically bounce back in the second quarter.
And that's for the U.S.
That's
for
just
China,
for the U.S., not global. Yeah.
China, we talked about the quality of Chinese GDP statistics, but even with the statistical massaging that typically goes on, there are expectations that the first quarter will look far below 6%, potentially, knocking 1% or even more off that growth rate. That's still a finger in the wind. Obviously, a lot of the economy actually does shut down for Chinese New Year every year, but this extended holiday, reports are that about 2/3, the provinces that account for about 2/3 of China's economic growth are going to be extending their Lunar New Year holiday for another week at least. The Chinese stock markets, the mainland stock markets, are set to open on Monday. We'll see if that actually happens. The onshore renminbi hasn't been trading. When you have these closures during something like this, the open of that market can be, they open with a real thud. We saw Taiwan's benchmark stock exchange open on Thursday down 5.8%. After reopening from their Lunar New Year holiday. So it's going to be one where market participants are sort of bracing for a really nasty open in Shanghai on Monday, if they open at all.
Wilbur Ross had a different view on the coronavirus yesterday. So something fairly outrageous and insensitive. Which was
taking
essentially
a victory
that,
lap.
Yeah, sort of a this will spur encourage firms that the U.S. would be the winner essentially of what happens in coronavirus. That firms will speed up the reduction in economic activity in China, and firms will come back to the United States. Which was a truly bizarre thing to say. I don't, and also probably even factually incorrect. I don't think anyone's expecting any kind of long-term shift of economic activity because of a particular seasonal virus.
Right, and that's something that has been, we've seen the S&P 500 here in the U.S. outperforming its Asian peers, understandably, given that it's much more remote, far fewer infections reported here. But there's airlines, the gaming companies, luxury goods companies, auto companies that have a lot of sales in China and build a lot of cars in China. And talk about disruption of the chip supply lines that are coming through in Taiwan and that sort of stuff. These are real economic issues, and we will see it play through. On the other side of it, something that investors have been worried about this year is the Fed potentially tightening or coming off of their very easy monetary policy settings, not hinting about rate hikes, but turning the spigot off on their liquidity injections. This will put the Fed on, they're basically not going to be doing anything for months as they wait for this to play through. Any sort of disappointing numbers in the global economic space, U.S. or abroad, over the next few months are going to be chalked up to a virus effect. So in some ways, and everybody's assumption is that that's going to be a fleeting effect, and global economy will bounce back. So it's the way that markets have. It's been a very orderly and a very measured approach for most U.S. markets.
That's actually a good reminder that we had some central bank activity this week, including the Fed and the Powell press conference. Why don't we take a break here and come back and talk about where the economy is and where the Fed is. You're listening to the HPS Macrocast.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The HPS Civic Science Economic Sentiment Index accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through HamiltonPlaceStrategies.com.
All right, we're back on the HPS Macrocast. Brendan, how did you see the Fed this week with FOMC meeting in the middle of the week? What's your take on that?
It was pretty straight down the middle for what the market was expecting. They didn't move rates. We're at 1.5% to 1.75% range, and then also they've been buying $60 billion worth of front-end treasuries, short-end treasuries. The purpose of that is to keep liquidity within the system, especially the repo market. That helps that. But they also did raise the IOER, interest on excess reserves that are held at the Fed. And the entire purpose for that is the IOER basically acts as a guardrail for the Fed to be able to keep that Fed funds rate within that range. So that was entirely a kind of a back office record keeping kind of move, not something that was intended to push rates up or down one way or the other. But the press conference with Powell was definitely had a very dovish tone, and I think some of the articles that have come out in the subsequent days have kind of reinforced that view on the Fed. Yeah,
there's a sense in the markets that as we mentioned before, that the Fed is not going to be making really any rate moves. They've signaled that they're well on hold. Rate hikes are way out over the horizon, given their established parameters that they will only start hiking rates again when there's a really significant uptick in inflation. We haven't seen that in a pretty long time. And their preferred measure, which we got again this morning, the core personal consumption expenditures price index, it wasn't even close to their 2% target. What was it, 1.6%, Brendan?
1.6, yeah. And it actually in November was 1.4.
So well undershooting.
Right. So rate hikes aren't even in the picture. There's discussion about exactly what they're going to do with the $60 billion per month. But, it's in an election year, it's inauspicious for the Fed to make big moves. And certainly with this Fed having over-tightened, I think that's fair to say. With hindsight being 2020, looking back at the 2018 period, they're definitely going to be gun shy about anything that looks like tightening. And although Chair Powell talked about maybe tweaking or turning off and saying the bill purchases won't go forever and that sort of thing, the balance sheet expansion won't go forever. Well,
I don't know. Yeah, I mean, forever. I can imagine something like forever.
Yeah, it's going to be pretty tough. Yeah, there's a lot of attention on the program on Wall Street. There's a lot of debate about whether it's stealth QE, whether it's stealth easing, stealth quantitative easing, or not. That debate is almost academic because the degree of belief is so big, and the Fed is going to be kind of messing with that at their peril if they try it over the next few months.
Yeah. And then and GDP, also right, just somewhere in the
2.1%
trend. Yeah, right. Trend growth rate. Not I'm sure that's disappointing for the administration and people who have this this dream of 3+%
right.
economic growth. That this should be somewhat natural, and it doesn't. That's not what this economy. That's not what an economy with this maturity. Right.
I mean, you don't have to be a mathematical genius. You just look at the last 10 years, and basically we're a 2% economy. But at the 2% economy that has a 3.5% unemployment rate and still creating 150, 200,000 jobs. So
it's not
a bad place to be.
Yeah, people it's 2% up an enormous, the world's biggest base, and so there's a lot of growth, a lot of need for workers, and we should also remember that that's 2.1, that's 2+% growth with $1 trillion deficits
right.
and zero interest rates.
Yep.
right? Like, I mean, it's hard to imagine, getting much better. So it's what it is. The expectations for next year have been knocked down a little bit in terms of growth. The potential, probably below 2%. That would be I think upset. Or when I say next year, this year, right? For
2020,
the rest of 2020. Not the best news for Trump running for re-election. But he's got, we heard his story out in Davos. He's got a strong story to tell about growth in the stock market and jobs, and even, breaking down the demographics on unemployment. So he's got a story to tell.
And you're going to see it in the Super Bowl. He's got his ad up where he's touting the unemployment numbers. He's touting the economic growth. I mean, this is going to be his rallying cry for the next few months.
And Bloomberg has a ad also.
Bloomberg's going up as well, more focused on gun control, family stories.
Are we going into politics? Are we making a shift from?
I think it might be time.
I was getting Nancy over here.
Why don't we do this? I definitely want to talk politics, maybe political economy, but let's talk. I want to talk politics because we have Iowa coming up, and we have Bryan with us, and he has a lot to tell us. And why don't we take a break here and come back, and we could spend the last segment on politics and have some good fun. This is the HPS Macrocast. We'll be right back.
On the first Friday of every month, HPS analyzes the latest jobs and labor market data in a digestible format. Sign up for our reports at HamiltonPlaceStrategies.com or on Twitter at HPS Insight.
And we're back, Bryan. I guess we're finally here. Iowa.
We are.
Iowa.
It's funny that this is also Brexit Day, because I feel like the other thing we've been talking about for months and years is 2020. And starting Monday, we officially kick off. We've got 5 months of caucuses and primaries, and we'll have our nominees, and then we're off to November.
So, and it'll be, something like weekly. We have, so we'll have Iowa this week, New Hampshire the following week. How soon until South Carolina, Florida, Nevada?
Yeah, every few days we're going to have something. Super Tuesday will be later this month, starting March 3rd. So February is going to be crazy. As Brendan was saying, next week is really quite a kickoff. We've got, first of all, the Super Bowl Sunday night, but you've got Iowa Monday night, State of the Union Tuesday night. You've got a Democratic debate in New Hampshire Thursday night, and then we have that primary the following Tuesday. So the print.
Can you break down Iowa for us? First of all, what can you tell us about the process? And secondly, what do you think is going to happen?
Yeah, well, a couple of things to know, because the process has actually changed a little bit this year, which I think could lead to a lot of arguments over the results. So the typical caucus, folks will start showing up Monday night, gymnasiums, cafeterias, schools. They get in there. It's about a 1 hour process where they will literally be persuaded by delegates from different campaigns to go into their respective corners. And that's what's known as sort of the first alignment. What's different this year is there will always be a second alignment. So if you don't make that 15% threshold, you'll be allowed to go kind of back to the pool and pick a second candidate. But what's different is if your candidate is viable, you're locked in there. So in years past where your candidate could become viable, but then you wanted to go throw some love to your second choice, you're now locked in. And only if your candidate is not viable can you go and pick another candidate. And then that's it. They're actually only doing 2 alignments this year. There won't be endless alignments. So we'll have some pretty quick decisions. I think what's interesting and could get complicated is the Iowa Democratic Party has decided they're going to release both numbers. We're going to have 3 sets of numbers that come out Monday night. They're going to tell you the first alignment.
Okay.
They're then going to tell you the final second alignment, and with that, the delegates that come with it. So you could very conceivably have 2 different candidates claim victory that they won all those first choice votes, but then claim victory that they got enough second choice votes. And delegates
And what's
that
the
went
timing
with it.
on this? Like, how late at night?
We'll know on East Coast time, we'll know by 11 p.m. I think
wow.
we'll start seeing results as early as 8 p.m., 9 p.m., but then they'll decide pretty quickly. The whole process takes about an hour, and then we'll start hearing about it.
I think it'd be best for the world if it's as confusing and muddled as possible.
Exactly.
Because it's ridiculous that people have to go run around campaigning in the 99 counties of Iowa. That's how we run for president of the United States.
Although that could be changing now. Mike Bloomberg is polling at about 0% in Iowa. He won't be there at all. I think he's actually announced he'll be in California with his eye towards Super Tuesday.
And what's he polling on the national polls?
On the national polls, he just came out and jumped into fourth place.
Wow.
So he's up, I think it's 9% now.
Right behind
a little
Warren.
bit behind Warren, but making a pretty big jump. And candidates have tried this before, but frankly, no one has had Bloomberg money where he's actually going to be able to pull it off.
Yeah, Rudy was the one who famously tried to do it, thinking that New York South in Florida would could carry him past non-competing in Iowa and New Hampshire, and that worked out pretty poorly for him. But to your point, he didn't have $1 billion or more to spend like Bloomberg does. And so I've been asked by reporters to comment on this about whether Bloomberg is disrupting the race. And I said, well, so far he's not, because you have these, dozen candidates running in 4 states, and then you have Bloomberg running single-handedly in 46 states.
Yeah.
Right.
So as of today, they're running 2 different campaigns in different places, and so there's no disruption going on now. But if we do come out of a muddled, first few states with maybe mixing up between Bernie and Biden, winning some of these contests, surprise winner would be if a Klobuchar, for example, would happen to somehow, surprise win in Iowa, and Iowa is prone to surprise winners.
They are.
Yep. So if that happens, where you have 3 different candidates winning, the first 4 odd states, then you've got Bloomberg has a case to make, and I know it's like the longest of long shots, but he's got a case to make and say, look, no one, these guys spent all this time with these guys, and voters aren't rallying behind them. Give another look over here, and then he jumps in.
And I think that's particularly true about Biden over the next month. Biden has proven to be sort of Teflon since he got in this race, despite media scrutiny, despite some stumbles. He's remained pretty steady at the top. If we get into a scenario where he's second or even third in Iowa, he's essentially pulled out without saying so in New Hampshire, so very easily could be third or fourth there. Does that start to show a lot of kind of chinks in the armor, and people get nervous and start flooding towards a Bloomberg or somebody else?
Hey, Bryan, what is the, we talked about Trump having a pretty, strong case to make on the economy. What's the Democratic charge against, about this economy right now? Or is it a better strategy to not talk about the economy and talk about the other pieces, which are, certainly flaws for him? There's a reason why his approval ratings, even with this economy, hang down around 40%. What's the better strategy? Is it?
Yeah, that's a great question, because that's the question we get from market participants. They're like, well, Trump's going to win. The economy's strong and the stock market's high. What more do you want?
Yeah, well, I think it's still very much a kitchen table economic argument that the Democratic candidates are going to make. So we have record low unemployment. We have Wall Street doing great, but you're still suffering from healthcare bills. You haven't seen your wages go up in close to a decade. You're dealing with student debt. I mean, that's what candidates are out there campaigning on. Frankly, Trump's still kind of campaigning on healthcare costs when he gets into these markets. I mean, these are the kind of local pocketbook issues that are working. And, with all the, I think Democratic candidates are looking at A, Trump's behavior, but then B, being that New Yorker, being that sort of business guy, it seems like that part of our economy is doing well. Is everybody else in Iowa and New Hampshire feeling that as well?
And nobody cares about $1 trillion deficits, right? No one's.
I don't think anyone cares. Yeah.
Warren tries to
snoring
pay.
and snoozing.
Yeah.
I hear.
Though Warren
No
tries to pay for her a lot of her things.
It is amazing.
Yeah, Lauren
dumb.
does. Yep.
Yeah.
Warren
Like,
does.
why?
And,
Yeah, because then you have to answer
Kennedy
it.
actually
Just
used to
say
run
we'll
on
find the money. Yeah.
and Bernie started getting some heat this week.
That was a great.
Finally
she really
called out
pushed
for
him
how
on it,
he's
you
going
know?
to pay for some things. Yeah.
And he just said, I don't know.
It'll be interesting, and I think Warren's kind of going to be an interesting story over the next week. She has, she sort of peaked last fall. She's been steady but dropping a little bit. She picked up a nice endorsement by the Des Moines Register. We haven't seen recent enough polling to see if that's given her a bounce, though we'll have the big Des Moines Register CNN poll Saturday night. But I think she could try to come in a third or a second and start to do a little bit of a comeback kid story.
My bet is, just as a student of history, I would love to have a brokered convention and see it just utter pandemonium. But I think it's going to be boring, and I think in the end, Biden's going to win this thing.
As someone who worked on 2004, I see a lot of similarities.
Yeah.
Like I was a Kerry guy, being from Massachusetts. We were done in November. We should have dropped out then. And then we just sort of slowly watched Democratic voters come back home, come back to what we thought was the safe bet to go up against George W. Bush.
Yep.
And the very same thing could happen. If Biden wins Iowa, if he does strong in New Hampshire, he's looking great in South Carolina, as he sort of always has. Nevada, he could start picking off wins and start rolling with it.
To me, the big risk for Biden is the big risk for Warren is that she never finishes anywhere higher than third, right? The big risk for Biden is that somehow he finishes third in Iowa.
Right.
To me, right. If he comes out of Iowa, there is no shame,
especially if that's a Buttigieg or a Klobuchar. If it's another moderate that beats Biden, he's in big trouble.
Exactly. If he underperforms in Iowa and probably and even New Hampshire, except to Bernie, right? Bernie can win both of those, and it's not. And I don't think it changes the dynamic of the race for Biden at all. But if he starts dropping down into the third position or somehow the fourth position, then that really opens the door for some of these other candidates.
Yeah,
so,
and again, I think of Bloomberg. I think that's where people
I think
really take another look at him.
Yeah, and look, my political friends on this, by the way, every time I say this, they think I'm bonkers, and the New Yorkers are all like, hey, Bloomberg, know?
Yeah.
And I'm just saying, and I'm not saying it's going to be Bloomberg. I'm just saying I would not count out a guy who has that amount of money to spend. He's already shown that it can have an impact. By the way, Tom Steyer has been spending comparable amounts of money even before Bloomberg got in the race and has had zero impact at all on his
That's a
profile.
great point.
So it's not just about the money. People may be willing to give him a look, and if they do, and if the others are not hitting their marks, I can see that happening. So
I was just going to say, Bloomberg has very successfully stitched together two stories, which is a moderate kind of pro-business, pro-economic group that appeals to a lot of voters that Biden and others also appeal to, but then a very progressive advocacy life after mayor that I think gets Democrats excited.
And that's the important point, too. He's not just a rich guy. He was the mayor, a successful mayor of the largest city in America. So it's
and he'll be on the Super Bowl talking about gun control.
Exactly.
Not about the economy, not about business, about an issue that gets a lot of Democrats fired up.
Yep.
All right, guys. Hey, what do we have to look for? Any data next week that we should be paying attention to?
It's a pretty big week. We have Jobs Friday next Friday.
Yes, we do.
So that's the big one for the week. We'll have some balance of trade, U.S. And China, which is always politically sensitive, but a little less so now that we've signed our deal. We get some ISMs, and then also earnings continue. So next week we have Google, and then we have a lot of insurance companies and Monday and Tuesday. Ford, Disney, GM, Fox, Tyson Foods, Twitter. Yeah, so we're getting to the end of the busy season of earnings, and so far so good.
All right, guys. Well, look, cover your mouth and noses when you sneeze. Wash your hands. Yep. Don't anybody get sick out there. Have a great weekend, and we'll see you next week on the Macrocast.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share. Find more from Hamilton Place Strategies at hamiltonplacestrategies.com and follow Tony Fratto on Twitter at Tony Fratto. Learn more about John Fagan, Brendan Walsh, and the work they do at Markets Policy Partners by visiting marketspolicy.com.